Hello, everyone. Welcome to This Week in Crypto, our first of December 2021, rounding out the end of a very, very exciting year in crypto. If you've been in it for the majority of the year, you've likely had a pretty good run, especially for the early half of the year. Obviously, in more recent times, things have been quite volatile. Over the Thanksgiving break, more technically Sunday, we did see a drop that had Bitcoin actually go below 54K, and Ethereum got down to just above 4K before things turned around to where we sit now, where Bitcoin is sitting around 56.8K and Ethereum is back up to around 4,600 or just below that. So we'll be going over plenty of health metrics for Bitcoin, especially a little bit of Ethereum, touching on several of your questions you may have about certain altcoins. And before I continue, I just want to remind everyone that we are not here to giving investment advice. Everything we do here is based on data and objective evidence based on history and what prices have done based on the metrics we look at in weeks, months, and years past. So with that out of the way, Dino, it's been quite a week. What have you seen yourself?
Yeah, so it's when we wrote the weekly report back a few days ago, actually on Monday, I thought that there were signs that the crowd was becoming increasingly bullish about Bitcoin once again, and I thought that might be a little bit of a problem. So we will be going over a few of our social metrics that are now exploding, and suggesting that the crowd is indeed, at least parts of the retail sector are becoming more and more confident. There are some signs that a potential correction might be might happen, both in terms of the social response to the range as well as the response of large addresses to the range, which have been offloading parts of their bags, not significant, but still a trend is important, parts of their bags in the last couple of days. That being said, there are also still, like, from a network level perspective, I think Bitcoin looks strong. We're going to be talking about the daily active addresses and a few other indicators that are just still super, super valid and show a upward momentum. So I'm not, worried yet, but a mixed bag this week. There's on one side, there's like growing confidence in the coin, which I never like. And then on the other side, there are strong fundamentals that could, result in another leg up. So we'll have to see. But yeah, I think we just go step by step, Brian, show the chat, everything that we've been seeing the last couple of days, and let them make their own decision.
You betcha. Yeah, I think there are some extreme metrics that we can touch on, but I think as usual, what we can look at to begin with is the circulation and the daily active addresses, which are essentially measuring the utility of Bitcoin on a day-to-day basis. So we can see just how much actual transfer to transfer we're seeing for the top network in cryptocurrency. Beginning with Bitcoin circulation here, we see that over the break, the 4-day break, if you're in the US and celebrating Thanksgiving, we had a very big day on Thanksgiving here where circulation actually got above 300,000. And I'll back out because I'm actually not sure the last time we hit 300,000. I know it had been a while. Yeah, it was around May 19th. So this was a legit 6-month high in circulation, and we had 2 back-to-back days that did this. I'll zoom back in here. After that, we had our usual dip over the weekend, and then we've essentially been going in the correct direction. We're still moving upward. If you can see this faint pink trend line here, that's just plotting a 7-day sort of average. We are climbing, and the circulation is at the pretty much the best level it's been in for quite some time. So this is a very good sign. Don't worry about the very rightmost column, as this is, of course, the current day that's still compiling. We can also look at circulation in the form of our NVT model here. And this confirms exactly what we're really seeing. This is our 3rd straight month thus far, albeit it's only been a couple days of December, so very small sample size, where we are in semi-bullish or bullish territory. In the first 2 days of the month have been fantastic. And that's why we're seeing this solid green bar indicating we are getting a very, very healthy level of unique Bitcoin moving from address to address.
So I think generally this, as well as daily active addresses, are both showing signs of strength. It would be very good to show what currently, the last couple of days and today in particular, Bitcoin's daily active addresses have looked like. Because on Monday, when I was writing the article, we were basically at that 50-day low in terms of daily active addresses. So Monday was actually quite a slow start of the week, and I mentioned in the article that it might be a sign of concern if Bitcoin's price continues to sort of consolidate, but on-chain activity maintains this downward trend, which we have seen in the last couple of weeks since, like, between the all-time high in the middle of November and the beginning of this week, the amount of unique addresses interacting with the Bitcoin have fallen by about 17%. So there was more than even the price fell. The price fell by about 13% since the all-time high. So it was mostly sort of a downtrend that we were looking at. And so the question that I posed was whether this was the beginning of a longer downtrend, like the one similar to what we've seen back in May, when there was essentially a month and a half long decline in the amount of network interaction with BTC, or are we going to see, a trend reversal? And luckily, I think for Bitcoin, we have seen this trend reversal in the last 5 days. So today, I think we are sitting at around 1.19 million daily active addresses for Bitcoin. That is the highest since the all-time high and the second highest day since May. So this is particularly interesting because Bitcoin's price isn't doing anything interesting at the moment. Usually these massive spikes in on-chain activity occur, and I think, Brian, it's even better visualized on the rolling daily active addresses chart. So the 24-hour DAA looks even better. So this chart that Brian is just about to show gets updated every 5 minutes, and essentially shows the total amount of daily active addresses in a rolling 24-hour span. So as you can see, the second highest day in terms of on-chain activity for Bitcoin since the May correction. So what we are now seeing is, I think for the first time in a while, we are seeing signs of network level growth while the price is consolidating. And it's something that has been lacking from Bitcoin's fundamentals for quite a while. Obviously, this could be an outlier, and almost certainly we're going to see network level metrics decline over the weekend because they always do. Each of these big drop-offs that you see on this chart are weekends. So the weekend activity level is always going to, kind of move back into the dumpster. Even with that said, I think it's a very strong sign that for the first time in quite a while, we are seeing Bitcoin's network activity rise into a boring price action. So just keep that in mind. So the last time that we saw this level of network activity was 2 weeks ago when Bitcoin was at an all-time high. And then the time before that we saw this type of level of network activity was all the way back in May. So for whatever reason, both in terms of the amount of unique addresses interacting with BTC and the amount of unique units of Bitcoin moving on the blockchain, today is a good day. And this week was a good week. So Brian, I think you already showed the NVT ratio. But generally speaking, this ratio shows the sort of dynamic between the price of Bitcoin and the amount of unique tokens being transacted on the Bitcoin network. And you can see that for the last couple of days, it has been very green. So what that essentially means is that based on this one very particular criteria, Bitcoin is looking good. So you shouldn't sort of base your entire valuation of Bitcoin just on this one metric. But the way it works is that it compares the total market capitalization of Bitcoin by the amount of unique tokens moving on the blockchain. So if the market cap is too high relative to the amount of value being transferred on the network daily, then that would pose, based on this indicator, it would show overvalued conditions. However, if the market cap is too low relative to the amount of value being transferred on the network, which is the scenario that we are currently in, then the NVT ratio is going to show green. It's going to show a potential bullish divergence. So, like I said, there are some worrying signs for me in terms of what might happen next. Basically, specifically because of what the whales have been doing in the last like 24 to 48 hours. But from a network level perspective, this week was a good week for Bitcoin. If we are able to sustain this type of momentum until the end of the year, I think it's a very sort of hopeful sign that Bitcoin can bounce back and even potentially, I don't know, move into another price discovery event. Obviously, it's very early to say so because it's only been a couple of days, but it's looking much better than it was looking at when I wrote the weekly report back on Monday, Brian.
Yeah, agreed. I think NVT is looking good thus far. And we've had, what I like about the model is it's had a good leading impact on what the following month will be based on that color. So, when we look at a breakout month like we saw in October 2020, for example, this came after we had a bit of a turnaround bar here, followed by 5 straight months of green. And it wasn't until, the month after we had our first red bar that we had an actual decline in the average price. And we're seeing that kind of again here. We saw that the final month was in September 2021, followed by the turnaround that happened in October after the initial all-time high, and then a bit of a decline. Even though we did hit that most recent all-time high in November, notice how the price is declining a little bit. And this is actually a bullish divergence. So when the green bars are indicating price can go up and price is actually going down, that's kind of a good sign that we are in a better than average territory if we bought now based on circulation alone. Of course, this is only one metric out of the hundreds and hundreds that we have. So it's always wise for us to check out many of the other metrics that are popping up right now. I think the next one that we can look at here, Dino, might be the funding rate, and we can see what Binance and FTX are doing.
So just before that, Symmetry is asking in the chat whether more activity means potential dump. So obviously it can mean. The reason why I'm not entirely certain that this latest spike in network level activity means that there's a market-wide sell-offs is because if you look at Bitcoin's exchange-related metrics, we're not seeing like a massive inflow of Bitcoin to exchanges over the last couple of days. Like the supply of Bitcoin on exchanges, as far as our data is concerned, is staying pretty flat throughout this week. The total net flows of Bitcoin to exchanges in the last couple of days have been going up and down. So there are types or sort of moments in time. If you look at exchange flow balance, Brian, there are moments in the last couple of days that the amount of BTC moving to exchanges has been going up, also been going down. So there isn't sort of any sustainable clue for us as of yet that this uptick in network level activity is simply new sell side pressure, which I think is very important to mention. But yeah, sorry, go ahead, Brian.
Yeah, and that's a good quick topic we can touch on too, since you've segued into it. The inflows have shown that there have been a few big spikes here in the past week or two. Obviously, this is the exchange flow balance, so this is measuring the inflow minus the outflow on any particular day. And you can see that there have been more high spikes indicating a difference favoring inflow versus outflow other than the one we saw here, which is interesting. So on the 30th, we had a big outflow spike. And these negative spikes are typically good and resemble higher chances of bottoms, but more reliably, if you see these ones, they're indicative of a potential top forming. And you can see that this one happened in the midst of the dump on the 25th, and then this one happened to kick off December. But these aren't huge ones by any means. Relatively speaking, if we look at the last 6 months, there are some bigger spikes that we've seen, back in July, back in late August here that have rivaled or dwarfed, I should say, what we're looking at more recently.
If you look at the supply of Bitcoin on exchanges, you will see that generally speaking, there's no significant uptrend. Like over the last week, it's mostly plateaued. So if there was a massive amount of new BTC being moved to exchanges, at least to the wallets that we have labeled as wallets belonging to exchanges, we would see a strong, significant uptick similar to, for example, something that we've seen in the middle of October. As of yet, those signs are lacking. So I think generally, like even if there was a dump or there were massive sell-offs, I don't necessarily think that that's a bad sign for BTC. I think sell-offs every now and again are healthy, and if weak hands are panicking, that's not necessarily a bad sign either for Bitcoin. So even if there were signs of like a network-wide sell-off effort, I wouldn't be too concerned in the short term. Maybe like immediately there would be a dump, but from a sustainability perspective, that's completely fine. So I would say as long as we see the sustainable rise in network level activity, I would be pretty confident. That being said, there are some metrics that are not looking as hot for BTC right now, Brian.
Yeah, let's take a look at funding rate. And from what I've seen, things have kind of mellowed out. We'll look at just the Binance one first and then switch over to FTX here. So this was the big, I guess, grouping of longs paying shorts to an excessive degree that we saw essentially about a month-long stretch of, beginning in kind of mid-October going all the way to mid-November. These were all of the signals indicating there was quite a bit of euphoria going on, lots of leveraged longs happening, people that were very, very confident that Bitcoin would just continue to climb. And of course it didn't. You know, we did see a correction, and these corrections often come during scenarios just like this, where we're seeing these big spikes and very overconfident trading calls. Once we did see that correction and we really hit the bottom of it, look at how the funding rate is essentially flattened out until it started to get exciting again. We saw a few signs of life that longs were picking up again. And then we had this big dump once again that people tried to long. It didn't really do anything exciting, so the longs flattened out again. And once they flattened out, that's actually when the price started to rise. And now we're in essentially the last 3-4 days, a cycle where people are trying to get their longs going again, but there's a lot of volatility and then dropping back. Is this essentially what you're seeing here yourself, Dino?
Yeah, so actually the Binance funding rate, there is another wick that happened just I think a minute ago. So it's slightly higher now at about 0.02%, but generally, yeah, it's not that high. Over the last couple of days, there have been periods in time where the funding rates on several high volume exchanges, specifically I'm talking about Binance and Huobi and Bybit, have been going higher and higher, suggesting that there was a sort of a rising bullish consensus among derivative traders. Because for people that are not familiar with what funding rate does, it tracks it basically tracks the fee paid by one side of the perpetual contract to the other. So when funding rate is high, it means that Bitcoin longs are paying Bitcoin shorts, so the market is bullish on average. And then when funding rates are low or negative specifically, that means that Bitcoin shorts are paying Bitcoin longs and the market is on average more bearish. So I wrote in the weekly report that there have been signs of growing bullish sort of consensus around Bitcoin specifically. And I think, Brian, we can tie this in with our social data very nicely. The Friday drop, right? So the drop on Friday happened right as we were basically recording the stream. So we touched on it a little bit, but it didn't really sink in for me what it meant, because on Friday, we had about a 10 to 15%, I think, drop in Bitcoin's price action, and it was mostly macro sort of economic trend. So it seems like the crowd is now fairly convinced that the drop on Friday happened because of the coronavirus, the new coronavirus variant, Omicron, because that's what tanked the oil markets, the S&P 500 index, basically everything fell into one cascading effort, right? So if you look at, for example, our social trends, Brian, and if you type in coronavirus or Omicron or COVID, those three words, you will notice that on Friday, that was the highest amount of mentions of those three words since the start of the year. So essentially, there was a massive amount of new chatter around coronavirus related terms in particular. So that got me thinking that maybe some people, and I then saw that sentiment being reiterated on crypto social media. I think what some traders are here experiencing, they think they're experiencing, or that are currently in a deja vu scenario, similar to what we saw back in 2020. So similar to what we saw in March of 2020, that Black Thursday event, where Bitcoin's price fell by about 35% in a span of 24 hours. And then a lot of people bought the dip and the price started to rise again. So I think what we are experiencing now is we're experiencing that same level of possible excitement about Bitcoin dumping because of COVID, because a lot of people are expecting the same scenario to unfold again. We drop and then we start rising in a very consistent trend upward. So if you also type in Black Thursday, Brian, you'll notice that there was a massive spike in the mentions of Black Thursday on crypto social media. You can actually just type in Black Thursday instead of all of the different words. I think it shows a more clear picture.
All one word, correct?
Yeah. Oh, actually, yeah, you can put a space between them.
Yeah, I think you have to put an and.
Only you can put an and if you want to search for all mentions of Black and Thursday together in a word. But if you want to see the mentions of Black Thursday when it's one next to another, you can just type in Black Thursday. So what we're going to see is we're going to see a big spike, a very big spike in the mentions of Black Thursday on crypto social media once this loads.
2 years worth of data, so it could take just a few seconds.
Might want to either refresh because it might be stuck.
Yep.
Yeah. Generally speaking, yeah, there we go. So a very big spike. And it happened right as we were dumping. So it's pretty clear to me that at least a part of the retail sector is expecting the same resolution to Bitcoin's price action to what we've seen back in March of 2020. So they're expecting we dump and then we start rising because this was only a COVID-related dump, and those have happened before, and we were able to recover more quickly than the traditional finance markets. So for me, that's a little bit concerning because also if you look at buy the dip mentions, they actually were the highest throughout the month of November back on Friday. So even though we've been basically dumping throughout the entire November, the amount of buy the dip mentions of crypto social media were the highest last Friday. All of these signs were to me a little bit concerning and pointing to the fact that the retail sector, the crowd in the crypto community were becoming more and more excited about the prospects of buying Bitcoin at a discount and then, watching their bags overflow. And so possibly the best chart to explain this or to show this, Brian, is if look at the social sentiment, right? Because over the last few days, especially, I don't know if how it's going to look on graphs. There we go. But on graphs, so this latest drop is because it's not loading the last day of data. So if you look at the graphs.santiment.net/social, it's showing a more reliable picture. So let's just see that real quick.
Not MakerDAO. There we go.
Yeah, and you can take the 12-hour interval. And so what we're going to see now is we're going to see the total average bias towards Bitcoin on crypto social media based on the mentions of Bitcoin that we've collected from about 1,500 different crypto-related channels. These are Telegram groups, crypto subreddits, Twitter accounts, so on and so forth. So we collect all this data and we parse it through a machine learning algorithm that labels it as positive, negative, that labels these mentions positive, negative, or ambivalent. And so you can see here pretty clearly, last couple of days, another big spike in sentiment related to Bitcoin. So overall, the funding rates, they've been kind of fluctuating, going high and then falling down again. But overall, there have been moments in time to tell us that the crowd is, or the derivatives market is trying to go long. And then we are also seeing the retail sentiment become more and more bullish about BTC in the last couple of days. So these, for me, are a little bit concerning because based on several backtests that we've done of our social data in the last couple of years, these periods of high confidence in a coin, especially retail confidence in a coin. So periods of market euphoria are generally not, more often than not, obviously there's no silver bullet, but they tend to coincide with either periods of price consolidation and correction or just a local top for the coin. So overall, I much prefer periods of time where the crowd is panicking and there's a lot more FUD in the air than our charts are showing up right now. So right now, there seems to be quite a lot of still interest and excitement about Bitcoin's price action. So for me, I would like us to go much lower. I would like us to be scared once again as a collective, because that would suggest undervalued conditions. And currently, I think we are still a little bit too excited as a community for Bitcoin to have a sustainable price rally. So that's from a off-chain perspective, a few signals, a few possible yellow flags. Obviously, I'm not saying that Bitcoin can't move up from this direction, but a few yellow flags that would suggest a sustainable rally from here might be a little bit difficult, Brian.
Yeah, I think on the sentiment side, just as Dino's explained here, we really want to start seeing a few negative dips that would indicate that people are actually becoming fearful of a dip like this. And there really hasn't been much. It's been quite positive. People are still confidently feeling as though this is just a blip in the radar and we'll go right back to those all-time high levels, 68K and beyond. And this is kind of just delaying the inevitable. And usually when that happens, we see a little more downside. But again, this is just one way of measuring things. This is a sentiment-related chart here when, of course, utility, whale behavior, exchange supply, how things are looking on the funding rate end. There's so many things that factor into things. But I would just keep this in mind and be weary of the fact that people are remaining quite defiant of any sort of fear at the moment.
Yep.
So
let's
with
look
that,
we're at about the 30-minute mark. Let's look at whales, Brian, because it's one of the least favorite charts, I think, for Bitcoin bulls at the moment.
Absolutely, you read my mind. So what we're looking at here is the combined balance. In this case, we're actually looking at the percent supply. So I'll change it to combined balance because I believe it's a little easier. So this pink line here is sharing the combined balance of addresses that hold 100 to 10,000 Bitcoin. That's a very wide range, of course, but they share one theme, and that is the fact that these are all millionaire addresses that hold, that are essentially deemed at least the top tier of trading whales, ones that aren't really too diluted by exchange addresses that might muddle the data a little bit. We're really looking at exclusively those top tier trading addresses that really move with the ebbs and flows of the prices on a weekly and monthly basis. And so we like to look at these to really give us an idea of what these top key stakeholders are doing with their coins at any given time. And right now, we can see just over the last 3 days or so, they dropped about, it looks like 65K in Bitcoin, which is a pretty sizable dump. It's nothing absolutely historic, but it's, looking at this chart, it's the biggest we saw since right here. And this was, of course, we found out just kind of a Huobi exchange cycle between two addresses, if I'm not mistaken, Dino.
I think that's the uptick that happened a week later, rather than that dump right there.
Got it. But either way, this wasn't as significant of a drop due to other circumstances. This one, we haven't really heard anything related to internal exchanges. So this could very well be a legitimate 65K drop in Bitcoin from these whales. And that indicates they aren't really a believer that prices can just jump right back up, at least right now. Could be related to their own COVID fears, or it's just time to take profit because it's at the end of the year for tax purposes. Lots of reasons, but either way, we much prefer things looking like this going up rather than a big drop like we just saw here. Go for it, Dino.
So I will give a few caveats to this. So number one, although the total amount of Bitcoin that is held by addresses holding between 100 and 10,000 BTC has declined, most of this BTC has gone to addresses that are even higher than this. So addresses holding between 10,000 and 100,000 BTC. So you could potentially say that these are just whales, even larger whales buying, right? The problem is that there's only about 85, 86 addresses holding 10,000, more than 10,000 BTC, and usually I think they are predominantly sort of exchange-related wallets. So I don't like to look at the 10,000 and above BTC category of holders as whales, because I don't think it's a fair assessment of who those wallets belong to, right? Now, you should keep in mind that in the last 2 days, we have seen the total amount of addresses holding more than 10,000 BTC grow by 4. So it's gone from 82 to 86. So one potential explanation could be that some large addresses that were already holding between 1,000 and 10,000 BTC have added a bit more BTC to their bags, and they have basically just been transferred into the upper category. I think what's more likely, and we still need to do some digging into specifically who these addresses are that have, first of all, dumped, and second of all, who these addresses are that have accumulated more BTC. I think the more likely scenario might be that some large addresses are looking to reduce their exposure, but we can't be sure for just yet. So keep it in mind that there are some caveats to what we're experiencing here. The money that has gone away from these wallets, or the coins that have gone away from these wallets, have gone into the hands of even larger holders. So now it's basically up to you to determine or to decide who these holders are. All I'm saying is that there's only about 85 addresses that have more than 10,000 BTC, and not all of them are individual addresses. In fact, some of them are just addresses belonging to centralized exchanges. So it's something to keep in mind. Anyway, Brian, I think before we go into anything else, I should sort of just give a call to action in chat. Chat, let us know what coins you would like us to look into. So we've got maybe a few more metrics for Bitcoin, and then we want to take audience questions. So if you want us to look into Ethereum or something else, let us know in chat. Bonus points if the coin that you would like us to look into is an ERC20 coin, simply because we have on-chain data for Bitcoin, Ethereum, all ERC20 coins, XRP, and Litecoin. We can also look at stuff like, I don't know, Polkadot, Cardano, other layer ones, other coins that are not built on Ethereum, but we can't look at on-chain data for those coins. We can look at social data, development activity data, but not on-chain. So if you want us to do a deep dive into things like whales, exchange movements, make sure that the coin that you're asking us to analyze is an ERC20. Otherwise, we can still look into a few interesting metrics. So, sorry, go ahead, Brian.
Yeah, another chart I think that's worth noting at the moment is the social dominance chart. And we were having a discussion about this earlier this week on one of our Discord channels. If you aren't part of the Santiment server, by the way, definitely check out our link. It's in our Twitter. I think we usually put the link in our description of these videos too. So jump in and you can have these kind of convos with us. But we're talking about the percentage of discussion related to Bitcoin versus other top 100 assets at the moment. And that's exactly what this metric, social dominance, is measuring. We can see spikes here, at the beginning of the year where almost half of all asset discussions were related to Bitcoin at one point, before we saw this big steep drop off that happened right before the big May correction happened. And of course, after that, Bitcoin became a hot topic once again due to the volatility. But interestingly, as the price has risen back to where it was and beyond where it was during the initial all-time high in mid-April, the percentage of discussion related to Bitcoin hasn't reached nearly where it was at the turn of the year and beginning of the year. And it's really plummeted in the last couple of months, or I should say about a month and a half or so, after the peak here in mid-October, October 20th to be exact. We're at pretty much 1 year lows for the social dominance of Bitcoin, getting to as low as about 10.8% over the Thanksgiving break. And we aren't really much better right now at 11.5%. Now, this isn't necessarily a bad thing. There's obviously a reason that Bitcoin isn't being discussed as much as, you know, many of the other coins within the top 100 market cap list. And that's because the other market cap assets have been surging for quite some time. They've had an absolutely incredible 2021. If you're an altcoiner and not a Bitcoin maxi, you've done significantly better than your Bitcoin maxi and Ethereum maxi counterparts. In most cases, if you've selected, you know, one of the top 100 market cap assets at random, it's likely actually done better than Bitcoin in 2021. So with that, there's a lot more attraction to these super volatile coins, especially when those volatile coins are mostly going up for an extended period of time. The long-term consequences, though, are that we aren't getting a lot of discussion about the king of crypto, essentially, the one that is propping up the market caps of everything else. So the long-term health of Bitcoin is extremely important when you're talking about the overall health of the cryptocurrency sector at large. And when it starts to be ignored, just like we saw here in mid-May, there tends to be some sort of event, often on the downside, that causes Bitcoin to start getting on people's radars once again. So to me, this is a yellow flag. It's certainly not a red flag saying that another dump just like mid-May is about to happen. But it's something to be mildly concerned about when the euphoria is so focused on altcoins, and there is, you know, this doesn't mean there's not optimism toward Bitcoin, but there's at least kind of a complacency, and almost this indicates to me that the crowd is bored of the price of Bitcoin in comparison to altcoins right now. And so we have to keep that in mind, along with the sentiment metrics and social volume that we look at to go in tandem with this one, Dino.
Right. Yeah. Okay. So the poll is up in chat, guys. Let us know which of the coins that you've already requested. You can now vote on them so that we see which of them are most popular, and then we'll choose the most popular ones. It's a democracy here at Santiment. So I think while we wait,
Dino, sorry, there was a request in the chat, to combine network profit loss with transaction volume, and I would suggest also dormancy circulation, which is similar probably to Coinage for Bitcoin, and mean dollar invested, like on one chat layout.
So they just wanted overlaid everywhere on the same chart?
Yeah, to see if network profit loss is taken by all-time holders or short speculators, and how massive is on-chain transactions.
So yeah, I've been looking at this. The reason why I haven't mentioned it is because it's kind of looking boring. Specifically, I mean the dormant circulation and age consumed. So those metrics, dormant circulation and age consumed, are metrics that track the renewed activity of previously dormant coins. So for example, if there's an address that has not moved Bitcoins, like in 2 years, and now it's moving those Bitcoins again, then you will see a spike in age consume in dormant circulation, right? However, in the last week or so, both of these metrics have been fairly quiet, meaning that in terms of dormant circulation and in terms of general renewed activity of long-term holders, we're not seeing any signs of that. We're in fact seeing quite a bit of dormancy. The only spike that happened was about a week ago, and since then, and this might be, by the way, we were just discussing what this might be, there was a purchase apparently of about $400 million worth of Bitcoin by Michael Saylor that happened right around the time where the spike in age consumed happened. So it could be some Coinbase wallets where it's possible that Michael used Coinbase as a vehicle for that transaction. So it could be that this spike in age consumed around a week ago is attributed to that particular transaction. But overall, since then, not a whole lot of activity of long-term coins or long-term holders. So they are pretty much still just staying on the sidelines, remaining dormant. We're not seeing any major sell-offs or any signs of sell-side pressure by long-term holders. As a result, we're for now staying put on that front. Now, as far as the mean dollar invested age is concerned, I don't want to get too deep into this metric because it's a little bit complicated to explain. But essentially what it means is when you look at mean dollar invested age as a macro indicator, it's very much like something that should be looked at on a 5 to 7 year scale for Bitcoin, for instance. So rising slopes in mean dollar invested age point to a period of time where on average, units of Bitcoin are remaining dormant. They're not moving between addresses. So overall, and Brian, I think you can sort of show us from 2016 to 2021 what Bitcoin's mean dollar invested age looks like. Overall, rising slope in Bitcoin's mean dollar invested age points to a network-wide dormancy or a switch to network-wide dormancy. So a period of time where Bitcoins are just chilling in their own addresses, right? And then these drop-offs in Bitcoin's mean dollar invested age point to a period of time where the average age of Bitcoins is becoming younger, essentially meaning that more and more BTC is being more frequently transacted between addresses. So there's more value being transferred on the network on a daily basis. And essentially that points to a period or a cycle of redistribution of BTC between stakeholders, right? And as a result, or what's interesting about this metric, is that previously in the past couple of long-term bull cycles for BTC, we have seen the Bitcoin's mean dollar invested age drop somewhere in the middle of the rally, suggesting that we have a lot more to go in terms of its price action. And then, so it indicated a bull cycle is still active. And then at the point in time where Bitcoin's mean dollar invested age moves from a downward slope to an upward slope, what we usually see an end of a bull cycle for BTC, because that, at least in previous bull cycles, has pointed to the end of a redistribution cycle for Bitcoin holders and a movement or a pivot back to dormancy, right? Where network level activity is dying down. There's not a whole lot of more fundamental justification for a prolonged rally. And as a result, these inclines in Bitcoin's mean dollar invested age are usually, or have in the past at least, not been a great sign for Bitcoin. So in the last maybe month or so, Bitcoin's mean dollar invested age has actually stayed quite passive or plateaued, which, I mean, it's at least a better sign than what we've seen in the months past, where Bitcoin's mean dollar invested age has once again started to rise actually quite steadily. So the reason why Bitcoin's mean dollar invested age is staying pretty flat or plateauing is because there's quite a lot of network activity. So we showed at the start of the stream, circulation and daily active addresses are quite high and have been quite high for the past month or so. So those metrics are making sure that there's quite a lot of value being transferred on the network on a daily basis. There's quite a lot of general transfer of BTC between addresses, and as a result, it's keeping Bitcoin's mean dollar invested age low. So the higher network level activity there is, especially when there are large old coins moving on the network, the lower the mean dollar invested age chart is going to be. For now, I think it's looking fine, but it's a very macro indicator. Like, you look at this from a sort of cycle perspective, not from a short-term perspective, which is really what we've been talking about for much of this stream. So yeah, anyway, Max, do we have the results of the poll?
We do. First place is Synthetics, SNX.
Ah, all right, SNX.
With 4 votes.
Brian, do you want me to take over, or do you want to keep sharing?
You go right ahead, Dina.
All right, cool. Give me 1 sec to take over the screen, guys. All right, so you should be able to see my screen here.
Yep, looks good.
All right. So synthetics, right? Not as great as some of the other coins are looking. Specifically, a lot of DeFi and Metaverse coins still pumping like crazy. In the meantime, synthetics, one of the DeFi coins, is not showing the same sort of level of price-related strength. So let's do a few different. Let's evaluate a few different parameters for synthetics. First of all, let's evaluate its network level activity. Is the amount of interest on the network level for the SNX token growing, which would be a possibly decent sign, or is it declining / plateauing, which suggests that not a lot of people are interested in interacting with this coin. So the first metric that we look into is active addresses to tell us how much is SNX being interacted with. Basically, how many unique addresses are sending or receiving SNX on a daily basis. This is a yearly view, and it's not looking great. I mean, I don't really need to analyze this chart all that much. You can kind of draw your own conclusions. Let me do maybe a 2-year scale just to show you what happened beforehand. So the amount of unique addresses interacting with SNX has sort of peaked at around 4,000 to 5,000 at the sort of peak or height of its bull rally right here. Since then, it has mostly declined or sort of went back to these normalized pre-pump levels. At the moment, it's hovering around 665, very devilish, or the level of network activity, right? So generally speaking, the trend would be down, right? The momentum in terms of the amount of interest in the coin from a network perspective is certainly a downtrend. Generally speaking, while again, I'm going to say there's no silver bullets, what we typically see is we see that sustained price rallies go hand in hand with an increase in network level activity and network level interest. A lot of people, on-chain analysts, use daily active addresses as a proxy for the amount of demand in a coin. Obviously, daily active addresses can mean both sell and buy side pressure. It doesn't really matter. As long as the speculative interest in the coin is growing, good, especially if it's growing organically and sustainably over time. For SNX currently, I really can't see a whole lot of that happening. We can also see the total amount of new addresses that are interacting with the SNX token daily. Let's see that. Same thing. So the amount of new addresses basically that are sending or receiving SNX for the first time, in the last 24 hours, there were 221 of those. So out of 665 total, that's basically a third of all addresses interacting with SNX are addresses that are interacting with the coin for the first time. Now, I will say, so the trend is not looking great, right? SNX addresses or just general on-chain activity for the coin is moving to the downside, where a lot of the other coins are sort of showing relative strength, even Bitcoin, right? However, I will say that trend is not everything. So let me go back to daily active addresses. So there's still about 600, 700 addresses interacting with SNX on a daily basis. That's still a lot. It's not going to put SNX in the top like 10 coins on the Ethereum network, but it's probably going to put it in like the top 25, 30 coins interacting with that are living on the Ethereum blockchain. So 600 addresses is still a lot. I would say that, I mean, we can look at that through our screener if we really want to. And actually, let's do it. We haven't done this in a while. So I'm going to show you how many coins have had more than 600 daily active addresses on Ethereum. ERC20 coins have had more than 600 daily active addresses in the last, well, let's say 7 days. So what I'm going to do is we're looking at our screener, right? So this is a dashboard where you can filter out coins on the platform based on specific criteria. So the criteria that we're going to set is, first of all, we're going to say, show us only the coins that live on Ethereum. So we go to market segments and we say Ethereum. So that's going to filter this list or narrow it down from 2,000 assets to 1,300 assets, right? So that's like step number one. Step number two, we go down here and we say daily active addresses. And I'm going to say, show me, first I'm going to move this from 1 day to 7 days. Show me all of the coins that live on Ethereum that have more than 600 daily active addresses on average in the last 7 days. So that's 44 assets. So I was close when I said 30. Generally speaking, it's still sort of in that upper zone in terms of the amount of interest in the coin, but it's not. First of all, the trend is moving in the opposite direction to where it should be, and it's obviously not in that main echelon of like the top 10 or top 15. So for now, I think what somebody that would like to get into SNX or somebody that already is in SNX should look for is he or she should look for signs of increased on-chain activity, because that would suggest sort of renewed demand for the coin on the blockchain side of things. For now, we're just not seeing it. Now, let's see if there's a whole lot of sell-side pressure for the coin. So let's start with exchange inflow for SNX. Okay, so exchange inflow shows the amount of units of SNX that are moving to known exchange wallets over time. And I'm also going to plot active deposits, which show the total amount of SNX related deposit addresses. So these are addresses that are used to funnel SNX to known exchange wallets. Okay, so when you see spikes in these two metrics, they typically mean that there's a whole lot of new sell side pressure, right? Because both of these metrics, as they rise, they indicate that more and more people or more addresses are looking to offload their bags to exchanges, and the assumption is they're doing that because they want to get out of the coin, right? So we've seen, for instance, if we look at this top here, we've seen quite a lot of exchange-related activity. So we've seen a few spikes in exchange inflow and also massive spikes in daily active deposits. If I change this from 12 hours to 1 day, we see that even clearer. So every now and again, we will see spikes in daily deposits around local price tops, which makes perfect sense because even here on a smaller scale, because the higher the price gets, the more the people are going to start taking profits. And in a short-term scenario, that can impact the price in a negative way. So currently, we are not seeing massive signs of new sell-side pressure. There's a little bit, especially in terms of exchange inflow. There are a few sort of slight spikes suggesting that there might be a little bit more like renewed sell-side pressure for SNX. Let's look at what network realized profit loss looks like for the coin. Okay, so I need to zoom out of these massive spikes. So there was something here that happened, probably some very old coins moving, am I right? Yeah, so you see that spike in age consumed. So that means that at this point in time, there was some transaction of like a lot of very old coins that moved on the network. So the network profit loss also showed a massive spike, because this metric, what it does is it shows how much in profit or loss are all daily transactions, right? So when you see this spike, it means that on average, all coins that were moving on the blockchain at this point in time were moving at significant profit relative to the last time they moved on the blockchain. And the reason for that is because there were some very old coins moving. So I'm going to zoom out of it just to kind of get a better sense of where we are right now. And yeah, as I would have expected, more recently, we have seen quite a lot of dips in network profit loss in terms of SNX. So what that means is that each of these dips point to a period of time where on average the coins, SNX coins moving on the network, are being moved at a loss relative to the last time they moved between, they changed addresses. So relative to, the assumption is to the time that they were acquired, that they were bought. So these would be essentially weekends moving out of SNX. And generally speaking, I actually, I think obviously it's not great for SNX holders that the price is dumping, and we're seeing a whole lot of uncertainty about the coin. But these dips in net profit loss are often a necessary precursor to our rally, right? Because what it suggests is that there's a whole lot of weekend capitulation, and if we assume that other fundamentals for the coin are strong, these dips in net profit loss can sometimes coincide with a local bottom, like it happened here, for example, or even here. The problem with this is that on a network level, I'm actually not seeing a whole lot of fundamental strength for SNX. So ideally, what we would see is we would see these dips in net profit loss, which would suggest, look, a lot of coins are being moved at a loss. A lot of holders seem to be selling their SNX, while like the network is blossoming, but the network is not blossoming. So, take that for what you will. All right, I'm also going to look at MVRV for SNX. So for you that are not familiar with what this metric does, the MVRV ratio is an on-chain metric that tries to evaluate the average profit or the average loss of all addresses that have acquired SNX in a portion of time. So the 30-day MVRV ratio, which is what we're looking at here, shows the average profit or the average loss of all addresses that have acquired SNX in the previous 30 days. So currently, that number is minus 10.5%. So that means that at this point in time, the average loss of all addresses that acquired SNX in the last month is 10%. So they're minus 10% or down 10% to their initial investment. So the way that some analysts use this metric is the higher the MVRV gets, the more unrealized profits there are. And as a result, the more risky it is to enter into a trade, because you're essentially entering into a trade against a lot of people that are sitting on a bunch of profits that they can dump on you at any point in time. And then the lower the MVRV ratio gets, the more opportune time it can be to accumulate. So what people do is they look at historical data and they try to find patterns, essentially local highs or local bottoms for an MVRV ratio, to tell us what are the historical danger zones, like at which points in time or at which profit margins do these short-term holders like to sell their banks, and then at which point in time in terms of profit margins do we see a potential for recovery. So I'm going to draw a line here, and you can see that generally speaking, anything above this level of about 55, 54%, there are some massive spikes every now and again, but usually like it lasts for like a day or so, and then it goes back down. So this level, I would say, suggests a unsustainable rise in MVRV and a need for short-term price normalization, right? So these would be for me like a danger zone, SNX entering into a danger zone in terms of its MVRV. And then the potential support seems to lie at around minus 30%. So we've seen several sort of local bottoms for SNX be between the sort of minus 25 to minus 30%. So we are getting close to it. We're currently at about, let me see, minus 10%. So we are getting close to it. We're not there yet. Historically speaking, I guess these would be the levels. So basically minus 30% here, minus 35, I think here. These would be the levels where you could say from an MVRV perspective, we seem to be in the potential recovery or bounce back zone. Overall, people are underwater. SNX holders, short-term SNX holders are underwater. And let's look at the long-term MVRV to see what they are looking like. Yeah, even long-term SNX holders. So this is the average loss of all addresses that have acquired SNX in the previous 365 days. So basically sort of a longer, the average profit margins of longer-term SNX holders. And as you can see, they're at sort of almost historical lows. Let's do a couple of more years just to see the entire history of the coin. Yeah, I mean, they're basically where we were, close to where we were back in the bottom of the May and June correction. So we bottomed out around 56%. Now we're at about 44%. So there's a little bit more to go. But historically speaking, yeah, we should be near to that sort of support level or support bounce back level. The problem is, like I said, all of this assumes that network level activity and fundamental metrics are looking good for SNX. Unfortunately, at least for now, anything can change. It can change in a minute. And SNX is, or Synthetics is by no means like a dead project or whatever. The trend in terms of the amount of interest in the token seems to be a little bit down. So I would suggest being careful with the coin. All right, Max, what else do we got in terms of what chat wants to see? Any other coins?
Second in line, just updated now, is Link, Chainlink.
Oh, okay. We actually haven't touched on Chainlink in such a long time. Let's look at Chainlink. All right. So I'm gonna do sort of the same spiel to start with, and then we're gonna do a few more additional metrics for Chainlink. So in terms of on-chain activity, as you can see, it's sort of plateaued around these levels for a while. So somewhat similar to SNX. So like I said, it's not just SNX that is seeing a decrease in on-chain activity. That being said, there are coins that are just looking stronger, right? But for now, the amount of addresses interacting with Chainlink seems to have sort of normalized at around 4,000. So 4,000 is still a lot of addresses. So I'm going to go back to my screener here, and I'm going to say, show me all coins that have had more than 4,000 daily active addresses on average in the last 7 days. That's just 12 coins. All right. Here's Chainlink at number 7. We've got Ethereum itself, Tether, USDC, Shiba Inu, Crow, Matic, Chainlink, Decentraland, DAI, Sandbox, Gala, and Rapteeth. It's in decent company still. So yes, I would ideally like to see signs of slow but steady recovery for the coin, but for now, we're just not. So unfortunate, but sorry, let me just quit Telegram here. There we go. But at least for now, we're not seeing signs of further decline. It seems like it's stable around the 4,000 DAA mark. Let's look at network growth. Okie dokie. So this is the amount of new addresses interacting with Chainlink. Yeah, I mean, obviously, you know, it's fallen down significantly since the May correction, but if we really look at it from a sort of 6-month view, it seems like there are periods of network appreciation and network depreciation. We're currently at about 1,600 addresses interacting with Chainlink on a daily basis, but new addresses, which I don't think is that bad of a sign. What we would like to see is these periods of sustainable network level increase that would suggest to us there's more room to grow. Right? Currently, it seems like the trend is mostly moving down. So from a short-term perspective, it's not a massively confident signal. By the way, give me just 1 sec to put my computer to charge so that you don't lose me. All right, should be good now. So this is what network level activity is looking like for Chainlink. So now, let's look at exchange inflow for Chainlink. And I'm gonna take a look at the last year. Okay, yeah, so this is beautiful. And let me look at active deposits as well. 1 day. Yeah, this is also pretty good. Okay, so remember when I talked about synthetics a minute ago, where I said sometimes these sell-offs are just natural and they're somewhat actually necessary for a coin to recover. So this is why, for instance, we will see these spikes in exchange inflow sometimes occur around local bottoms for a coin, as well as local tops, but sometimes will occur around local bottoms. So we see it here, we see it here, and we also saw it just recently, a couple of days ago, where there was a big spike in the amount of link being moved to exchanges right around the local bottom. And if we look at network profit loss, I wonder what it looks like. Yeah, it looks like this. So, okay, let me zoom in a bit so you can see it a bit more clearly. So what we see is we see a big spike in exchange inflow, and we see a relatively significant dip, actually the biggest dip since September, in network realized profit loss. So what that essentially tells us, and I'm going to zoom out of these big spikes so you can see it a bit even more clear. There we go. So big spike in exchange inflow and also a significant dip in network profit loss. So what that means is that a lot of Chainlink at this point in time was moving to exchanges. And at the same time, on average, the units of link that were moving on the blockchain were moving at significant loss relative to the last time that they moved on the blockchain. So what that means, weak hands were moving coins, and a lot of coins were moving to exchanges. So the assumption is a lot of weak hands were moving out of Chainlink. And sometimes, like I said, this is a good precursor for a short-term bounce back. This is what happened with Chainlink the last couple of days. Obviously, I think it's also just a market-wide effort to recover. But generally speaking, it's not always a bad sign to see sell-offs, especially if there's like strong fundamental support for the coin. It can indicate a period in time where we might look for some recovery. So in terms of active deposits, we see similar things. So we see active deposits peak both in terms of sometimes around local tops, like here and here, and around local bottoms, like here and here. Like I said, it depends really a whole lot on what the context of the market action is. So if the coin is rising and you see spikes in active deposits, yeah, that means a lot of people are taking profits, and as a result, you might want to consider reducing your exposure a little bit. But also, when you see like spikes in exchange inflow and active deposits around bottoms, it can be a decent sign because it suggests that a lot of people are selling at a dumping price. So there's a whole lot of lack of confidence in the coin, and sometimes it's good to bet against that lack of confidence, to buy when there's blood in the streets. So at the moment, it seems like generally the exchange activity has normalized. There's not a whole lot of new sell side pressure. So yeah, for now, it doesn't seem all that interesting. And in terms of network profit loss, what are we seeing? Yeah, we're also, so we've gone from a few significant dips like here and here. By the way, all marking local bottoms for Chainlink, if you'll notice, even here. We moved away from these dips to sort of a normal, slightly, somewhat profit taking and somewhat sort of neutral level of network profit loss. So for now, it's kind of in the middle of the way. It could go either way for now. I much rather would see these massive anomalies in either direction so that I can figure out what happens next. If you look at MVRV for Chainlink, it is down. I mean, for most coins, it's negative right now. For Chainlink, it's currently at about minus 10%. If we take a look at historical data, it seems like there are several bounce back zones. So there's one here, and then there's another possible bounce back zone around here. So there we go. One around minus 20%, which is where sometimes we see potential for recovery for Chainlink, and then another one around minus 40%. So we are getting close to that first bounce back zone for Chainlink. We're definitely way removed from these historical peaks for Chainlink's 30-day MVRV ratio. So there's quite a lot of room for us to grow before we can, at least based on MVRV, say that Chainlink is overvalued. In fact, if anything, it's currently, I'm saying once again, only based on this metric, is a bit undervalued. Now, let's also look at the social data for Chainlink, because we haven't done that for SNX. I think for Chainlink, it might be a bit more interesting. So first of all, let's look at social volume for Chainlink. So yeah, there's been a big spike in social volume. Let me do a daily chart right here, right around the local top. And there is quite a bit of new interest in Chainlink today. I'm not sure, did anything happen today? Chainlink related, let's zoom in a bit. Yeah, so quite a bit of spikes here, and then something happening today as well. So generally, these types of spikes in social volume while the price is pumping are not a great sign for a coin's price action, because based on several sort of backtests that we've done, what these spikes show is that the crowd is becoming super excited about the coin, and the crowd is becoming hyper aware that the coin is pumping. So you're essentially, if you're buying here, you're buying against a lot of very excited retail traders. And this typically suggests an overvalued or sort of undersold conditions, right? So currently there's also a little bit of an uptick in social volume. I'm not sure if it's price related or if there's been some announcement. Either way, I'm not a great fan of big spikes in social volume. I will also check out what the average sentiment towards Chainlink looks like. All right, 12 hours. Yeah, okay, great. This is exactly what I would expect to see. So I see a big spike in social sentiment right around the local top. This is something that happens every once and again. So big spike in positive or sort of euphoric sentiment towards a coin right as the price starts to move in the downward direction. I would much rather, like I said, for Bitcoin, I would much rather us be in sort of this type of neutral to bearish atmosphere rather than this kind of massively overvalued and overhyped territory. For now, so there has been a spike in social sentiment today as well. I don't know, is there something happening with Chainlink? Because there's a big spike in social volume and there's also quite a bit of a spike in social sentiment. It's now moving down, but it could very well meander back up by the end of the day. So if this continues, I would be a little bit concerned, simply because like I said, I personally don't like a whole lot of excitement about the coin. I would much rather buy when nobody's really talking about the coin and its fundamentals are looking strong. So yeah, I think that's going to do it for us today, guys, because we're already 10 minutes past. Brian, anything that is there any additional questions in chat that we might want to answer before we end, or anything that you want to add before we call it quits for the day?
Someone asked, can you show how to find potential altcoins which are invested by whales? We do have a Sandsheets model. If you have your Sandbase Pro API active, you can use a whale model that distinguishes between around 40 different assets and can show you what the percent differences are in their percent changes of their holdings. So that would be a great one to check out, and you can get some quick signals as to what top key stakeholders are doing for some of your favorite assets. Just know that it's limited to ERC20s as well as Bitcoin, Binance Coin, XRP, Litecoin, and Bitcoin Cash.
So
I believe that's it. Yeah.
So just to reiterate, there's a Santiment model that you guys can access, which essentially shows the difference in the amount or the percent change in the amount of various coins being held by large addresses. So you can see when large addresses are accumulating specific coins and when large addresses seem to be moving away from a specific coin. You can even add additional coins to that chart, to that template, right? So Brian, if you want to share that template in chat so people can look it up for themselves. Yeah, you do need a Sandbase Pro subscription for it, but I think it's a very interesting sort of template for people that are really trying to find, alpha by looking at what whales are doing. Okay, we're gonna be calling it quits here, guys, just because we're already a little bit over time. We'll be back probably mid next week, Tuesday or Wednesday, with another sort of shorter video. General conclusion for the day, at least, is that Bitcoin's metrics are a mixed bag. So I do think that at least for the last couple of days, network level activity is looking strong. There's no doubt about it. On-chain activity, daily active addresses, unique token circulation, all of these markers of interest and demand for a coin are rising. As far as the blockchain level activity is concerned. There are more concerning signals, however, the one being that large addresses seem to have shed about 60,000 BTC. So that's what, more than $3 billion in the last 48 hours. Not a great sign. And also signals that we are seeing the crowd sentiment toward Bitcoin moving in the positive direction. More and more people expecting that this dump that was spurred by the coronavirus scare is going to unfold the same way like the Black Thursday dump did. So we're going to dump initially, and then we're going to move all the way up to new all-time highs. So these markers of euphoria are not something that I would like to see. So what I would suggest keeping an eye on in the next maybe couple of days until we talk again, keep an eye on daily active addresses and circulation of Bitcoin. Those metrics are going to dump over the weekend almost for sure. Still, you can track how much they've declined. Usually it's sort of a 20% decline, so you can use that as a barometer whether the dump over the weekend is too high or too low. And also keep an eye on sentiment metrics. So is the average bias towards Bitcoin increasing, becoming more bullish or less bullish? The two metrics that I would suggest using for that is social sentiment and funding rates. So funding rates are going to tell you whether the derivative market is becoming more bullish or more bearish. The social sentiment is going to tell you whether the crowd, the community, crypto community, is becoming more bullish or more bearish towards a coin. And then finally, just keep an eye on the whales. Currently, they seem to be moving their bags. Historically, that hasn't always been a great sign, but there were times when this type of offloading scenario has not immediately resulted in a correction. But keep an eye on it. If this trend continues, if these whales and large addresses continue to shed their Bitcoin over the weekend and in the coming weeks, I would be a little bit concerned about where Bitcoin has the potential to grow. For now, it's just started. So, watch this space, I guess. So we're going to be back next week, guys. Until then, Max, flash the promo code before we go. So TWIC, for anybody that has not yet tried Sandbase as a platform, first of all, you get 2 weeks free. But if you want to take advantage of a discount and you like this type of analysis and you like these types of indicators, there's 25% off waiting for you if you use the promo code TWIC, which stands for This Week in Crypto, during the checkout process. So you get 25% off either a monthly cycle or a monthly plan or even a yearly plan, which is better value, obviously. So yeah, join our Discord in the meantime so we can keep chatting after this call. And I'd like to thank Brian for being here with us and talking about the market. Brian, anything to say before we go?
No, thanks, Dino. Make sure to like and subscribe, guys. Always helps. And we will see you all next week.
Thanks, everyone. Stay safe, okay? Okay, bye.